Hello friends, good morning and welcome to the Block Thrasher Daily Morning Crypto Update, where we are shattering the complexities of crypto with news, commentary, analysis, and education. I'm on a mission to bring you the best analysis, the best fundamental analysis of cryptocurrencies. Why? So that you can make the best decision of which projects to invest in and make the most money. Now, if that's something you want to do, please be sure to subscribe, like, and share the channel. Listen, yesterday I came out and said that I think 2021 is going to be the year of Cardano. I had no idea when I released that video yesterday morning that Cardano would pump 27% overnight, that it would become the number 3 crypto in terms of coin market capitalization and see an all-time new high last night of close to $1.40. But that's exactly what happened, and I'm not surprised. I'm standing by it. Cardano is going to be the cryptocurrency of 2021 for a lot of different reasons, and we're going to look at a couple of those reasons today. But before we get to that, let's look at our word of the day: cheeseparing. Cheeseparing, definition: cheeseparing, something worthless or insignificant. It is also used to speak of being miserly, economizing. Miserly, economizing. What are some synonyms? Synonyms can help us to understand a word and its usage. Synonyms for cheeseparing are cheapness, closeness, miserliness, parsimony, penny pinching, stinginess, tight-fistedness. Did you know? Those familiar with William Shakespeare's history play Henry IV may recall how the portly Falstaff remembered the thin Justice Shallow like a man made after supper of a cheese paring. Falstaff's unusual food simile is one not easily forgotten, and people began to associate cheese pairings, bits of cheese trimmed off a larger portion, with other things of little significance and value. In the 19th century, the meaning of cheese paring was extended to miserly economizing. Presumably, the practice of paring off the rind so as to waste the minimum of cheese was viewed as an excessive form of frugality. So cheese paring could be an excessive form of frugality. Listen, when it comes to stacking crypto, being cheese paring, it might not be stack it, get those little bits. Little bits can add up. That's the crazy thing about it. A tiny little fraction of Bitcoin back in the day, or what seemingly was a fraction, is worth so much today. An example of cheese paring in a sentence: Ebenezer Scrooge is portrayed as a taskmaster so dedicated to cheese paring that he would prefer that his employees freeze to death rather than splurge on heat. Cheese paring. It's a fun one. I like it. I hope you liked it as well. All right, let's move forward and take a look at market prices today. Before we do that, I have this chart here to show dominance. We've been tracking this. I've looked at this a couple times with you guys, and it is the Bitcoin dominance and where the other cryptos sit in terms of total market capitalization, right? And so when we speak of Bitcoin dominance, what we're saying is that when you take the entire cryptocurrency space market capitalization, which is 1.4 trillion today, it's been hovering around 1.4, 1.5 trillion dollars. What percentage of that total cryptocurrency market capitalization does a particular coin hold? And historically, we can see that years ago, in 2014, 2015, all the way through 2016 and into 2017, Bitcoin was very dominant, over 80% and higher, sometimes as high as 90% in terms of dominance. That radically changed when Ethereum came onto the scene and became hugely popular, and we had the ICO boom at the end of 2017 and going into 2018, and Bitcoin dropped in dominance, sometimes seeing lows of 40%, 30%. Well, currently, in this bull run, Bitcoin has been holding steady, so we haven't seen that significant drop like we did back during the previous massive bull run. But what I wanted to point out is that here's the takeaway that I'm bringing to you with this. Bitcoin is currently 61% and been hovering in terms of market dominance. Ethereum is 12.72%. So, wow, I mean, long ways to go to ever catch Bitcoin. But then look at number 3, which today is Cardano. Cardano is 1.96%. Now, people often ask, where can the prices go? Where can the price of Cardano go? Where can the price of Binance Coin go? Where can the price of Polkadot go? Etc. they can go a long ways, because in terms of total market capitalization, they're just a small, tiny 1.92%, basically, these tokens are. And if you take the total market capitalization of crypto, which is 1.4 trillion, and you compare that to other market classes, assets, commodities, gold, silver, etc., that is even a much smaller portion, just a fraction of what those markets are. So all of this to say, there's a lot of room for growth still within the cryptocurrency space and within the market. All right, moving forward to prices. We are seeing green. We are definitely seeing a little bit of a market turnaround here. Bitcoin is up 1.96% in the last 24 hours. Still down 17% for the week though. So still hurting. However, $47,170 is not a shabby price. I mean, obviously we'd like to see it hit that $50,000 mark again. I'm sure it will, probably soon. Ethereum has really taken a hit this last week, and I can only imagine that it's because of the gas prices. Yes, we've talked about that numerous times. You just can't transact on the blockchain without excessive fees and or delays, which have been caused by congestion. All of this presumably and hopefully will be solved with the launch of Ethereum 2.0, which is coming soon. We are definitely looking forward to that for sure. Interestingly, Cardano actually surpassed Ethereum yesterday in terms of transactions as well. Binance Smart Chain recently doing the same, and this is another reason why we're seeing the price of Ethereum potentially. I mean, when it comes to price and the market, no one really knows, but these can be factors, and so we cite them as potential factors. Now, Cardano is up a whopping 25.86% in the last 24 hours. That's a 22% increase on the week. It is now $1.39 according to CoinMarketCap.com. Binance Coin is up slightly, 1.63% the last 24 hours, now $226.89. Polkadot saw a good night. It is up 12.48% at $34.16. XRP, and I do believe we have some news about XRP once again. Yes, XRP and Moneygram. We're going to be talking about that here in just a little bit. Some things very interesting that Moneygram revealed about what was happening with its partnership with XRP, and also why they pulled out, etc. Litecoin is up 2% to $174.81. Chainlink is up 3%, $25.94. And rounding up the top 10 at number 10 is Stellar XLM, up 17.77% to 44 cents. Now, Stellar is an interesting one because it's kind of this also potential sleeping giant, a good platform that is, and I don't even talk about it much, it kind of just slips out of the mind, right? But it's an alternative to Ethereum as well, similar to Cardano, Polkadot, and Binance Smart Chain, right? BNB. So that would be the number 4, right? Ethereum, Cardano, Binance, Polkadot, number 5 platform type token, Stellar, at number 10. And it does not get that much attention. It might be one to pay attention to and to watch and to look at if it becomes popular for development, for people to launch their dApps and smart contracts on, etc. That being said, I do believe that we will continue to see Ethereum, Cardano, Polkadot, and Binance battling it out for, we call it the platform war, right? See who's going to get dominance there. My bet has always been and probably will continue to be on Cardano for many reasons, which if you watch this channel, you're going to hear what those are, or maybe already have. That being said, love Ethereum, love Polkadot, good teams, good people, good guys, good technology, fixing problems, moving forward, all good stuff. I absolutely agree with what many people have been talking about of late, which is there's room in the cryptocurrency space for all of these. They can go after different problems. They can solve different issues, provide different tech, and coexist. And there can be interoperability. I think that's what we're going to see eventually moving forward, is that you're going to be able to utilize tokens on the different platforms and swap them across to the other platforms in quick, fast, cheap, and easy ways, which is going to be good for the space. So while there is a war, ultimately, everybody knows that they're vying for supremacy. At the same time, there can be coexistence and working together and interoperability and these types of things, which will be good for the space in the long run, especially for those of us who are users. All right, moving forward. Some news about Cardano. Why is Cardano pumping while other cryptocurrencies are slumping? This story from decrypt.co. The ADA token is now the third largest cryptocurrency by market capitalization and ignoring the bearish blues that have hit Bitcoin and Ethereum. Yeah, yesterday it was a sea of red. It was painful. People on the social media platforms were like, I don't know if I can take it anymore, and that sort of panic was setting in. I'm getting out, whatever, And other people, obviously, who've had more experience in this place are like, no, just hodl. This happens. Markets go up, market goes down, especially within cryptocurrency. And that's true. All of that is true. And trying to guess the market, boy, I tell you what, some of the smartest people out there, such as Charles Hoskinson himself, who developed, Cardano, and others are like, I'm not a trader. And the reason I'm not a trader is because I wouldn't begin to, and I'm not a trader either. I'm a long-term fundamental investor, right? I'm looking for the value. I'm looking for real-world use case. I'm looking for things that are going to be done, problems that are going to be solved, that are going to be valuable, that are going to actually be transformative and revolutionary, maybe even change the world in many instances, and invest there to see, enough about that. In brief, Cardano has increased in price by nearly 600% since the start of the year. Just since January, up 600%. Yeah, it's been a nice run. It's one of the few top tokens performing well at the moment. There are two plausible explanations for the upward price moment. So, ADA, the native cryptocurrency of Cardano, has surged 13% in the past week, 269% in the last month, 2,633% since last year. It's been staggering. Phenomenal. With all of that upward momentum, it's managed to become the third largest cryptocurrency by market capitalization. Today, it kept going all the way up to a price of $1.28. Yeah, it actually went past. This story was obviously written sometime last night. It's to $1.40 and currently sitting around that price. As much of the rest of the market lingered in the red. Bitcoin this week fell 15%, Ethereum is down 22%. So we know those things. We've covered that already. Now, apart from Dogecoin, the price of which was helped by Elon Musk tweets, Cardano is the best performing crypto asset in the top 20 this year. Best performing asset. And I think we're going to continue to see that. Remember, friends, I said yesterday that I think 2021 is going to be the year of Cardano. Impressively, and like Dogecoin, it's performed well despite not being listed on Coinbase, a major gateway for Main Street USA investors. It's funny that they're still talking about Dogecoin in this article, but I think it's simply just because it's being pulled in the search engine results, and so it's been, but we're starting to see all the fervor and all the talk of Dogecoin start to subside. Something else I talked about a long time ago, the fundamental underpinning facts of the technology and of the economics and the coin economics of Dogecoin just aren't there, and so it is not a good long-term bet. I don't mean to offend anybody. I know that upsets some people, some newcomers that have just come in and they don't understand the economics and they don't understand the fundamentals, and they're like, what are you doing? If people would just stop talking FUD about Dogecoin, we'd all be making money and this sort of thing. And it's just not how it works. So anyway, I feel compelled to let people know the truth of what the reality is and what the analysis says, right? It's not a personal thing at all in any way. It's not. So why is the price of Cardano going up? There's two likely culprits. First, it's hard forking at the beginning of March. and that's a good thing. After the Mary hard fork, Cardano will become a decentralized multi-asset smart contract platform. So Cardano's been in this process of becoming more and more decentralized. And last time I looked in the Daedalus Cardano wallet, you can go and look at the staking pools, and then there's another tab which says info, and it shows the level of decentralization that has occurred as Cardano has moved from a federated system where a lot of the staking pool servers were run by IOHK to becoming run by individuals, and now completely decentralized, moving towards complete decentralization. It's at 80%. So getting very close, and that's going to happen here in the next couple of months. And as that happens, and with the Mary hard fork, it's moving towards total decentralization. Also, smart contracts, decentralized finance, DeFi, and non-fungible tokens, NFTs, are all coming to the Cardano network. And so people are factoring that in, and so there's anticipation, I think, that's being pulled into the price, into the speculation that people have that these things are going to be launched. And another thing that I haven't seen mentioned, and I'm not certain about how this is going to work yet, but we've seen with other platforms that there are often airdrops, new projects that come out on these platforms. Like this happened a lot with EOS, and obviously with Ethereum. So these tokens that are released, it's possible that ADA holders will receive those tokens in airdrops. Obviously, no promises, so I'm throwing that caveat out there. But I have an expectation that that could happen, and if it does, if any of those are valuable projects, that's just going to be a boon for Cardano holders. Obviously, the biggest boon, I think, of date, the most notable airdrop has been the Uniswap airdrop, which became incredibly valuable for everyone, and that was based not on holding Ethereum, but having interacted with the Uniswap platform. I keep an eye on that, and I will keep you guys abreast of any airdrops that are known, that are coming, that you might be able to take part in. Now, this can be a little challenging because sometimes what happens is you have to be using these platforms way back before they're known, and then there's a snapshot taken at that time in the past, and you can't just go out and do a quick transaction to get placement in the airdrop. But I'll try to keep you informed about that as much as I possibly can. I'm watching that constantly. So, blockchain projects get upgrades and integration and new features all the time. There's no solid evidence that individual investors are pricing that into their decision while ignoring developments on other networks. Although Cardano is getting ready to introduce NFTs at a time when they're getting mainstream media attention, it's a great timing. So they were saying that's number one reason. It could be this coming Mary upgrade, but that's difficult to really define that would be the reason why Cardano is pumping. A second factor it could be in driving up the price is the news of FD7. That's at that Dubai investment firm. I talked about it yesterday, which sold $750 million of Bitcoin, so it could buy ADA and Polkadot. And it's interesting because we saw one of the founders of that investment firm yesterday saying that, and it made me laugh. And I said some things about it yesterday. I want to talk about it again today because he said that Bitcoin has very little use or something to this effect. And I think what he meant to say was, or what he was getting at, not meant to say, he meant what he meant to say, but he said what he meant to say, I'm sure, but was getting at the idea that the smart contracts and the decentralized applications and the things that are happening on these platforms are going to just bring huge and immense value. I mean, it's what we were just talking about with NFTs and, decentralized exchanges and all kinds of investment types of tools and apps that are coming out. So, but Bitcoin, that to say, Bitcoin does have use, and it is in that digital gold type of store of value thing. That not only that, there are second layer tools, the platforms, projects that are being developed that will bring some of these things to Bitcoin, the smart contract type functionality and other things. So obviously Bitcoin still has massive dominance, as we looked at, in terms of market capitalization, close to 60%. It's the gateway drug of cryptocurrency, right? I mean, the institutional investors come in and they get into Bitcoin. Now, it is interesting that because of these retail platforms, your Robinhoods and your Voyagers and your Crypto.com and your Coinbase.com, retail investors are now, it seems, not necessarily just coming into Bitcoin as they once were. picking up these altcoins in hopes that they're going to see greater gains. And historically speaking, that has been true. I mean, if you just look at what we're looking at with this article here about Cardano being the best performing asset this year, and even longer than that, with a 2,600% increase, Bitcoin hasn't had that. We've seen 100% increase, right? Or whatever it's been. It's a little bit over 100%, right? Because we're at $48,000. But the point being is that if you purchased, I've run the numbers before, even if you go back 3 years and you put the same amount into a coin like Cardano and the same amount into Bitcoin, or if you make that more recent and you do the same with Polkadot or any of these altcoins, you do phenomenally. Your returns are phenomenally better with the altcoins. Now, that's not to say that Bitcoin isn't a great investment, and it is, and it's anti-inflationary, and yeah, it's but back in the day, it used to be that most things traded against Bitcoin, and they still do to an extent, but you can also trade against the stable coins, and on certain exchanges like Binance's BNB, which also might be helping to lift its value. But just the point being is that my expectation would be, and I know the Bitcoin maximalist would not be happy about this, but I would see, we don't have to see Bitcoin decrease in price to drop in dominance. But we could see the other projects sort of rise up as they tackle problems, as they bring in people that otherwise might not be brought in. And that's part of it. That's another reason why altcoins are good for this space, because they're drawing in these people that otherwise might not be attracted. There's programmers out there in India and in Africa and all around the world that say, hey, I've got an idea. I'd like to build an application. I'd like to help my people who maybe can't get banking services or something else. And I want to provide this application that's going to be, we're going to look at one today. It's called the Reserve Project, and it's kind of interesting. But it wants to help people in places like Venezuela, who are suffering from hyperinflation of their currency, the Bolivar. So these types of things is what I'm talking about. And it's an Ethereum token for now. And so moving on, this is the number two, the second reason for the speculation of why Cardano might be pumping. However, they do state that, that theory that Dubai firm that is investing so much into Cardano and Polkadot doesn't hold that well, because Polkadot, the other recipient of that investment money, was down 13% for the week. Although it is interesting, if we go and we look today, Polkadot is now up 11.45% in the last 24 hours. So, who knows? I mean, my guess would be that this may actually not have any impact as of yet, because they could have already done their purchasing, or they could be doing it moving forward. Who knows? As significant of an amount of money as it is, it's also not that big of an amount of money. So, here's where I had read what Hoskinson was talking about with being a trader. Cardano founder Charles Hoskinson, who also co-founded Ethereum, doesn't know what's behind the market momentum. So even the founder of Cardano, it's like, I don't know. And yeah, I agree too. I mean, I think it's all about network effect. It's all about adoption. I think it's just that people are starting to see, as most of the cryptocurrency influencers that you'll watch on YouTube, etc., that have huge followings, they've done the research, they've done the analysis. So most of them are also talking about the superiority of Cardano and singing its praises. And so I think all of that sort of could just be, obviously, as the price starts to go up and it's moving up in market capitalization, snowball effect, and retail people start to come in, and people just heard about it yesterday are like, how do I buy Cardano? And you start seeing that happening. So these are the things that are happening and going on. And I would throw out even this. So Hoskinson says, yeah, I don't know. He says, quote, "If I knew why the prices behave the way they do, then I'd be a trader, not a builder. I'm focused," he says, "on the growth of the Cardano ecosystem and the realization of our industry's use and utility in the developing world." And I love his philosophy. I mean, obviously he wants to see Cardano price rise, and he wants to see it do well. And I think he's incredibly competitive and wants to dominate. But at the same time, he's like, I'm not focusing on that. I'm focusing on building the best possible ecosystem and and use cases. And you see that, like if you start to dig deep into the platform and you see what's going on with Catalyst and how they're trying to bring in people literally from all over the world and give them the money, give them the funding and the resources to build the applications that they want to build. And last night Hoskinson was giving an AMA, right, and Ask Me Anything. Just he does these random Ask Me Anything things, and he was someone on there was a programmer, and I know the subject came up of OpenBazaar, which if you're not familiar with OpenBazaar is like a peer-to-peer marketplace where you can buy and sell goods and do that for cryptocurrency. It's really cool, actually. And so he was like, look, somebody pick this up, create an OpenBazaar for Cardano, we'll fund it, throw your idea into the Catalyst governance voting app and get the support. So that's sort of like a GoFundMe kind of thing, where if a couple developers come along and they say, look, we want to create a marketplace like OpenBazaar, but we don't have the money to do it, they can go in there to Catalyst and they can make a proposal, and then the community can vote on it and say, okay, we're going to help you build that. Here's the resources to do it. So, all right, I think I've said enough about Cardano. Moving on to the next segment and the next story of the day. I'm going to skip this, which I was going to talk about, which was IOHK's, announced a partnership with another firm that is releasing a smart contract language, which is called Glow, to be used on the platform. And Glow is compatible with the EVM, Ethereum's EVM, so it will be both compatible with Cardano and with Ethereum, and it's just a simplified language that makes writing smart contracts, instead of it being 100 lines of code, 10 lines of code. And they're touting that it has more, it's more efficient and more security as well. And so it's just another good story of what's happening there with Cardano. All right, moving on to the next story. This is interesting. So, the U.S. government inadvertently is currently the biggest, most effective PR marketing entity for cryptocurrency. Let me explain what I mean. Let me explain why. I'm just going to drop down to something that this story points out, which I think is really interesting. Some Bitcoiners who threw their previous stimulus check, all right, the stimulus, and this is what we're going to be talking about, into the cryptocurrency market, right? At the current market rate, the $1,200 stimulus check allocated to U.S. citizens will be worth nearly $10,000 if recipients put it into Bitcoin. Isn't that incredible? $10,000. So if you take it, look, more stimulus is coming. What you going to do with it? The U.S. government just unwittingly made the biggest PR move for Bitcoin. I like what this author is stating. Let's give some credit, some accolades to Olivia Brooke is her name. Bitcoin at $100,000 is a price prognosticated by pundits, courtesy of the fundamental factors that signal the bullish rally. However, Bitcoin is receiving an external push from the same organization that steadily criticizes its credibility. The United States government, in its official fashion, is helping the benchmark asset live up to analysts' expectations with the constant advertisements. The $1.9 trillion stimulus package could change everything for Bitcoin. And that number, $1.9 trillion, almost $2 trillion. Wow, when COVID first hit, the U.S. debt was something like $20 trillion. It's gone up to $26 trillion. I don't even know what it is, but I know it had gone up to $26 trillion. I know it just keeps going up and up and up and up. And now we're talking $2 trillion. We're going to be at least close to $30 trillion very soon, right? So that's a 30% increase from 20 trillion to 30 trillion. Wow, it's just staggering. And what does this do? This puts more money into the system, right? And it's good for cryptocurrency. And just go to the grocery store, go get some gas, whatever, and you see prices of everything is rising, right? So the last thing the U.S. economy needs right now is more inflation. But the one thing needed for the U.S. citizens to sustain their welfare through the global COVID-19 pandemic is a stimulus bill, according to the United States government, right? For Bitcoin, this is a solid entry point for some of the biggest financial institutions and independent investors who will search for a dependable reliable storage outlet for their wealth to get on board. Last year, when the first check was sent out, the stock market suffered a major decline as inflation forced the wealthy to find shelter in Bitcoin. Gold dropped significantly, too, when investors began to question its scarcity and its historic performance relative to Bitcoin. Yeah, and if you go look at the chart, Bitcoin has just been stomping on gold. Sorry, Peter Schiff. While whales are better positioned to secure the biggest amount in profit, smaller investors can outpace even the most skilled trader by simply holding just about half or of a quarter of Bitcoin's current price, which is only about $937 more than the incoming $2,000 stimulus check. So this is funny. I mean, it just makes me laugh. It's this ironic Bitcoin advertisement. Earlier today, it was announced that the $1.9 trillion stimulus package is set to be approved by the House and sent to the Senate. Following the announcement, Bitcoin tumbled upwards. Although the bullish recovery cannot be credited to the news, Bitcoin is bound to benefit from the result of the U.S. fiat printers working overnight. Ironically, this comes shortly after Treasury Secretary Janet Yellen poked into the asset's credibility. So this next story, let me make sure I have it, is funny as well. Because here it is. As Janet Yellen is, the stories we just read say poking at, Bitcoin and doing the normal thing. She's saying, well, it's used for illegal activity, which is just kind of ridiculous. I mean, JP Morgan Chase is now, encouraging their clients to allocate up to 1% at least into their portfolios. And you have Tesla buying $1.5 million of Bitcoin, and other institutions, adding it to their balance sheets. I mean, everywhere you look, it's kind of comical, right? And the actual data shows that Bitcoin and cryptocurrency is used less for criminal activity than the U.S. dollar, right? Which just makes sense. Right? Anyway, all the while she's saying this stuff, the Federal Reserve Bank sees a nationwide outage days after the Treasury Secretary says Bitcoin is extremely inefficient. So this story just covers the fact that they went down for like 24 hours. The Federal Reserve's system went down. Their servers, everything went down. The glitch affected the automated clearinghouse, ACH, the system which is being used for paychecks, bill payments, and other small and medium-sized transactions across the economy. The Checks 21 system, as well as the FedWire system for processing large sums of money, were also down for about an hour, according to the reports. The glitch suffered by the Federal Reserve Bank is at best the perfect defense to the jab thrown at Bitcoin BTC by the Treasury Secretary and former Reserve Chair Janet Yellen a few days ago, per her words. Quote, she says, "I don't think that Bitcoin is widely used as a transaction mechanism," Yellen told these people. "In an extremely inefficient way of conducting transactions, it is," she says, "an extremely inefficient way of conducting transactions, and the amount of energy that's consumed in processing the transactions is staggering." Okay, Janet, listen, Bitcoin, we'll give it to you. Bitcoin uses a lot of electricity. It's an inefficient way of doing transactions. It's not going to be a payment processing system. We've come to recognize that. It is now the digital gold, right? It's going to fulfill that purpose. However, if you spend a little bit of time to go out and see what actually is happening in the cryptocurrency space, what you will find is that these new platforms, be it Polkadot, Cardano, XLM, Ethereum 2.0, we'll even put Hedera Hashgraph in there. All of these, not only are they already hitting transaction speeds that are better than Visa, which is like 40,000 transactions a minute, these will do million, even millions once they have fully scaled. Both Polkadot, Cardano, they can process up to 1 million transactions, incredibly efficient. And when you look at Cardano, they moved something like $14 billion just the other day for something like $1,000 in transaction fees or whatever it was, 7,000. It was a very small amount, right? It's going off the top of my head. But the point being was, if you go look at the data, they're extremely, incredibly efficient. Not only that, this can be done around the world, globally, and it's borderless. And so the fees, and going to the inefficient way of the energy, that's consumed, right? This issue, yeah, Bitcoin's going to continue to consume energy for sure because it's proof of work. But these other platforms, most of the other platforms, if you look at the top 10 cryptocurrencies, let's just jump over there and look just to illustrate what I'm talking about. Bitcoin, proof of work. Ethereum, proof of work, but moving to proof of stake. So it will be proof of stake and use very little, almost, non-consequential amount of energy. Cardano, proof of stake. Tether, well, that's on a couple different platforms, but it's not proof of work, so there's no energy consumption issue there. Binance Coin, proof of stake. Polkadot, proof of stake. XRP, not a proof of work system, right? There's no mining going on there, no energy consumption. Litecoin and Bitcoin. Litecoin and Bitcoin are the only two in the top 10 that are energy consumers that are proof of work, right? So when you look at the cryptocurrency space as a whole, it's moving away from that completely, and those problems are simply non-issues. However, the Federal Reserve clearly has a system that is vulnerable, that can go down, as it did. If their system is penetrated, it's attacked. I mean, this is, it's actually quite phenomenal to think about the fact that the largest, most powerful entity probably in the world, the central bank, the Federal Reserve, right, responsible for the issuance of the US dollar and the Federal Reserve note, went down, that their systems went down. Since the inception of Bitcoin, it has never gone down. There's been slowdowns because of congestion, but you've always been able to make a transaction because of the decentralized nature of it. I mean, you could literally take out the entire United States, pull the plug on the grid, let's say, and Bitcoin's going to keep running because you got miners and nodes running all over the globe, China, everywhere else. So it's just kind of ironic. But hey, it's going to take time. It's going to take time. Bullish signals from miners. This is good news. Miners have stopped selling and started accumulating their Bitcoin. Yesterday was the first day since December 27th when miners' position change turned positive. Miners were selling their Bitcoins for 2 months, but now no longer. They're just stacking them. Definitely bullish. The chart that I just showed is from a popular analytics company called Glassnode. These guys do some of the best crypto analysis, right? And they said that for the first time since December 27th, the miner net positive indicator has gone green. Yep, the miners are holding. Good, bullish news. Institutions are moving massive amounts of Bitcoin from Coinbase and moving it to cold storage. Now, this isn't that interesting of a story, but I brought it up because we've been discussing something of late on the channel and in the Facebook group, and that is this issue of storage of your cryptos, of custody. Should you self-custody, or should you leave your tokens in the custody of a third-party provider such as Coinbase? And Coinbase has come up, and Coinbase has a vault, which is also it's their long-term custody solution, right? So if you're not going to be trading, and you would never want to trade on Coinbase anyway, the fees are going to eat you alive. If, especially if you're dealing with small amounts, right? You want to get to an actual full-fledged legitimate exchange. So you could go to Coinbase Pro, where the fees are a little bit better, but still bad. Or you can go to Binance, or you can go to Kraken, or you can go to a number of different places to do this. But here's the issue, is that you want to do what the institutions are doing. This just illustrates what I've been talking about. Institutions are taking their Bitcoin, massive amounts, and they're moving it off of Coinbase into their own wallets, into their own custody, and into cold storage. Why would you do that? Why do you want to do that? Well, the reason is actually quite simple. If you don't have the private keys, you don't actually own the asset. What I mean by that is, if Coinbase, for any reason, goes out of business, has a catastrophic technological failure, whatever it might be, then they could just run away with the money, disappear, and you have no legal recourse against it. They clearly state on their website that there is no FDIC insurance that covers your funds, right? And so it's just a very basic, fundamental thing to sort of understand and to realize and to know. You know, it's just like if you're talking about gold, let's say, and you go out and you buy a gold stock, you know, a commodity, you buy an e-gold type of thing. Now, if something happens and you ask for delivery, and they're like, sorry, we don't actually have the gold, we can't give it to you, but you can sell that the paper asset, we'll give you money for it, right? Well, you know, whether they actually have the gold or not, that's another issue, but bottom line, you can't get the gold. Same thing with the cryptocurrency. You know, you can't get it unless you have those keys. So best practice is get that crypto that you're going to hold long term into your own cold wallet, into your own custody with the private keys. Have the private keys, right? All right, moving forward. Ripple and Moneygram. This I found quite interesting. Ripple woes hit our bottom line, says the Moneygram CFO. The CFO of Dallas-based Moneygram, Larry Angelini, will have a difficult time replacing income lost from the crypto from the company serving the partnership with Ripple due to the SEC suing the cryptocurrency platform. So what happened was when the SEC made its claim and sent its notice to Ripple filing for a lawsuit against Ripple stating that a number of different things, but one being that Ripple used XRP as an unregistered security to raise funds for the company. And, you know, there's news on both sides. There's been a lot of, you know, they don't have a case, they do have a case, and we'll see where the whole thing goes. Overall, it's bad for the entire cryptocurrency space. And I think we would have been better off if these guys had never done this, for sure. But, you know, hopefully it just sort of, the SEC drops the case. That would be good for the entire cryptocurrency space. Although it does sort of seem like these, you know, some guys kind of get away with just reaping a ton of money from what they've done. But before the cut, when the case, the SEC made its announcement, MoneyGram dropped. Initially, they broke ties with their contract or with their relationship, their partnership with MoneyGram, but then they eventually cut it off completely. But before that, MoneyGram used the Ripple platform as an alternative means of foreign exchange instead of Forex, right? The Wall Street Journal reports. So if you're not familiar with Forex, what Forex is just it's the market for currencies, the fiat currencies around the world. So you can trade dollars versus Japanese yen, or whatever currency you want to do, the renminbi, Chinese, versus the Bolivar, or whatever. And there's these pairs, and you can trade them on the Forex, right? So instead of using that, MoneyGram was using Ripple, using XRP through Ripple, which is a centralized company, right? The private company Ripple. They had a partnership with them to use XRP. So Angelili explained that MoneyGram would buy XRP on U.S. cryptocurrency exchanges with U.S. dollars. Then the XRP would move on the blockchain to a foreign currency exchange. So that's quite interesting. So they buy it, some U.S. exchange, maybe Kraken or who knows whatever the U.S. based exchange was. They would. Is Kraken U.S. based? I think Kraken is U.S. based. I just said that and I want to confirm. Anyway, a U.S. exchange, and they would send it to a foreign exchange where they would then there it would be converted into the local currency and deposited into MoneyGram's accounts. The company said it had been able to reduce forex risk by offering almost real-time settlements using XRP. So there's two reasons why they did this thing. Number one was what was just stated, was they were able to do this in almost real time, which is incredible and just an illustration of it's almost ironic, isn't it? It's funny because the exact opposite of what Yellen was just saying. MoneyGram, this legacy financial old school traditional system for doing remittances and sending money around the globe, was using XRP, was using cryptocurrency because they could do the settlements in almost real time. Fantastic. So that was number one reason why MoneyGram was in this partnership doing this. And here's the second reason. The partnership had boosted MoneyGram's bottom line by reducing working capital needs and generating additional revenue. XRP, here's the crazy thing, Ripple actually also paid MoneyGram a premium for using its platform and legitimizing it for new markets. Some 15% of the company's EBITDA last year had come 38 million in net market development from these fees for XRP. So I read this and I was like, whoa, this is incredible. Ripple was paying, essentially, MoneyGram to use XRP. And MoneyGram was gaining two benefits. Number one, fast settlement. Number two, profits earned from that. Because when I read this, then the Angelini said, here it is, he was at a loss as how to make up for this shortfall. He added that there are no comparable solutions to facilitate cross-border transactions in real time. And I'm thinking like, what? Of course there are. There's all kinds of crypto. I mean, you could do this with Dogecoin, It's fast, it's cheap, it's global. It's on U.S. exchanges, it's on foreign exchanges. But what he's really talking about is what's not comparable solution is that there's no entity out there that's gonna pay MoneyGram and give them those fees that Ripple was giving, that XRP was giving. And so XRP has said it is working with MoneyGram to help provide alternative solutions and find a potential way forward for their continued partnership. If there's a resolution to the case, especially if Ripple prevails, then I would say there would be no problem, Angelini said, but that could be a long time. You know what's funny about this whole thing? If I am in the United States and I'm running a company and I want to hire and outsource to a developer in any country, it doesn't matter what it is, I don't need MoneyGram. I don't need XRP and MoneyGram. I can just send him Bitcoin or any other cryptocurrency. And so see, this is part of the whole issue of what crypto is about. Is MoneyGram is providing that service. They're that third-party centralized entity that is eating up part of the transaction in its fee, and so that's what we want to avoid, right? I mean, for doing what? For doing what? Well, it turns out for doing what you and I could do, for going onto an exchange and getting XRP and sending it to a foreign exchange and converting it into the currency of that country, what have you. Well, how much easier is it? Isn't it easier for me to just have let's say an XRP wallet, and for Joe in Ethiopia to have an XRP wallet, and I send him XRPs and he goes and sells it on the exchange and converts it to his local currency or whatever? Goodbye, MoneyGram. Moving on to the last segment today, I like to do a coin highlight. And typically with the coin highlights, what I do is I bring a lesser known or almost unheard of coin, but that has potential. I like something about the use case or the team or the technology or something that they're doing. This one today is not something that I want to make you aware of from an investment standpoint as a potential coin to look at, to consider, but it's just interesting in what it's doing. And it has to do with some of the things that we've been talking about today. And that is this. In Venezuela right now, the people are suffering because they are in an hyperinflationary economy with the Bolivar just seeing insane inflation. And so they need a way to preserve their wealth. However, it's very difficult for them to do this. Reserve Protocol is coming along, and there's numerous solutions that are working on this, but this one's interesting. Reserve Protocol, basically what they want to do is create a stable coin. But unlike some of the other stable coins, so if you look at Tether, for instance, in theory, the way that Tether works is that Tether holds on to US dollars, and they have one-to-one parity. So how many ever US dollars they have, they can create a Tether USDT and token and give that to people in exchange for their US dollars. So, in theory, you send US dollars, you get a Tether token, one-to-one, stable coin. Now, the issue with that is it's not decentralized. Tether, you have to trust that Tether actually has the dollars to back the Tether tokens that have been created. Reserve is going to start out in a similar fashion, but they want to move this into a place where it is eventually decentralized. So that's the first number one thing that's kind of unique and interesting about this protocol. But number two is the way they want to go about doing it. What they want to do is they want it to be stable initially, tied to the US dollar, but then eventually, as it becomes decentralized and stable, and this, I don't know how this will pan out, but the theory is to be stable even if the US dollar becomes inflationary, right? And so the way they're going to go about doing this is where it gets really interesting. If you've been paying attention and watching sort of the discussions that go on about Austrian economics versus Keynesian economics, and the theory, modern monetary theory, and the idea that we need a central bank, and the central bank is creating this fiat currency that's not really backed by anything. It's not tied to gold or any other commodity or any other asset, and but the Federal Reserve or the central bank can control the economy by creating more money, and then if there needs to be less money, somehow moving the money out of the market, hopefully being able to do that, right? If you're following all of that and the discussions that go on, there's some great channels out there. I recommend George Gammon, The Rebel Capitalist, would be an example. Talks a lot about these issues. One of the issues that the Austrian economists, right, coming from Ludwig von Mises, and you can go to the Mises Institute as well, Mises.org, to learn all about this type of stuff if it catches your attention and your interest. But they've been arguing for real money for a long time. They're saying, no, look, money needs to be backed by something, right? It needs to have some sort of backing, some sort of real world assets backing, etc. Versus the Keynesians who are like, no, it doesn't matter. I mean, we can just, because we're a government and we're backed by a government. I mean, basically that's the backing that we have. The backing that we have is that we have the biggest gun, we have the biggest military, and we are the reserve currency of the world. And if you don't do what we say, we're gonna blow you up or take you out, basically. I mean, that's kind of the backing. Sad to say, but that's kind of the backing of the Federal Reserve, or of central banks even, is the ability to rule and to lock you up and to tax you and all those sorts of things. It's connected. But anyway, what this reserve project wants to do is they want to create this stable token that is moving in a direction toward where it will be backed by actual assets. So they talk about this. It could be collateral tokens is what they're going to call them, and I'm trying to find, but they're talking about it being backed by things such as tokenized bonds, property, and commodities. So that would be gold, silver, gas, whatever. So they state that the portfolio will start off relatively simple and diversify over time as more asset classes are tokenized. So the idea is that you have these commodities, gold, silver. I mean, it could be pork bellies, it could be anything, and then you've got these bonds and you've got property, right? And all these, and they can be tokenized, and so all of that can then be brought into the portfolio, which is the commoditized, real-world asset-backed, collateralization for the reserve token. It's an interesting idea. It's really interesting, like how they could if they could pull this off. It seems like this could be an interesting solution. Let's just put it that way. Sort of a, because people have talked about it, like there's problems with having a gold-backed currency. We talked about some of those problems earlier today. We don't necessarily know what the supply of gold is. There could be a massive amount of gold found. There's questions as to that. But this is an interesting concept that could be very, very, very effective, to have this currency that's backed by this huge basket of tokenized commodities. Why would this be so effective? Well, think of it this way. When the government calculates inflation, right? What they do now, it wasn't always this way, but what they do now is they adjust it current inflation rate that gets the report that's given is based on a selection of items. But what they do is they say, okay, beef is really expensive right now, but if beef is expensive, people will buy chicken instead, and chicken's cheap. So we're going to throw beef out of the calculation and only include chicken currently. However, the problem with this is there's certain things that people just need. Gasoline, rent, mortgages on their home, food. Yeah, sure, you might buy, the beef's kind of expensive this week, I'll buy chicken instead. But you still have to buy chicken or something, right? So it's not really accurate. But the point being is, if you have a currency like this reserve protocol is trying to do, it's made up of this basket of all these different commodities. It doesn't matter if one shoots through the roof or another one drops or whatever, because what it's doing is it's stabilizing the value of that reserve token out across all these commodities, and that works to preserve purchasing power. It's pretty cool, actually, when you think about it. So anyway, I just wanted to bring this thing to your guys' attention. Oh, and how do they keep the price? That's also quite fascinating, actually. This is how the reserve token is stabilized. If demand goes down for the reserve token, prices are expected to fall in secondary markets, right, in exchanges, etc. So what happens then? Suppose the redemption price of reserve is $1. If the price, of the redemption price in the smart contract, right? So this is run on an Ethereum smart contract currently, and so you can always go to the smart contract and you can get reserve tokens for $1, right? And you'd be exchanging them for a US fiat dollar at that point. If the price of reserve on the open market is, let's say, 98 cents, arbitrageurs will be incentivized to buy it up and redeem it with the reserve smart contract for $1. See, so people would just go out there, these are arbitrageurs, and they would buy the reserve token at 98 cents and then go to the smart contract and sell it for $1, and they'd earn a profit, right? So that'll pull the tokens out of the supply of the market, bringing the price down, right? They'll continue buying on open markets until there is no more money to be made, which is when the market price matches the redemption price of $1. So once it's reached parity, there's no more incentive for anybody to go buy it on exchange and then cash it out in the smart contract. The same mechanism works in reverse when demand goes up. If the price of reserve on the open market is $2, let's say, then the arbitrageurs will be incentivized to purchase newly minted reserve tokens for $1 worth of either collateral or reserve right tokens, the latter only if there is an excess pool of reserve tokens available, and immediately sell them on the open market. They'll continue selling on open markets until there is no more money to be made, which is when the market price matches the purchase price of $1. So interesting mechanism, and potentially very effective. It's interesting because there's all kinds of economic discussions that we can get into about, is it necessary to have an inflationary currency? Bitcoin's non-inflationary. Great store of value because of that. It's deflationary. The asset's going to continue to increase in nominative value of the currencies, the fiat currencies, in relation to it, right? Because they're inflationary, it's not. So it's a good store of wealth. Great store of wealth, and this, as gold typically has been. But economies do expand, productivity does grow, there are more products and companies being built and value coming into the system, right? So the theory and the idea being that the currency does need to expand with that. The problem becomes when the currency expands at a far greater pace than the actual productivity does, or the underlying value of the economy and the commodities and the property and everything in it. And that's the concern with what we're seeing today with all the stimulus, is that there's no real actual productivity being created. And as time has gone on and on and on, more and more and more of our total GDP here in the United States, and the same is true across the world, is actually generated by government spending and not by productivity within the private sector. And so If you had a system, though, that was a currency like this, that was commodity backed, and that grew in proportion to that actual growth within an economy, it could be an incredibly useful currency. Anyway, I've said enough about that. It's fun to think about. Just wanted to sort of make you guys aware of it. Hey, thank you so much for your time. I hope you have a phenomenal Saturday. Enjoy the weekend. Remember, it is always a great time to earn more crypto. Love you all. Have a great day. Talk to you soon. Goodbye.